This video will give you helpful hints for completing problem P6. This problem will look at creating an aging for accounts receivable. Open up the file called Aging and have your text turn to the problem on page 50. The goals of this problem are to prepare an account receivable aging schedule, to apply the allowance method of accounting for uncollectible accounts, to be able to interpret and manipulate data, and to be able to create a chart. Let's look at the problem data. You will see a listing of all accounts receivable balance listed by customer in alphabetical order. Each customer has their own account receivable balance. These balances have been aged, which means they have been separated into categories of not yet due, 1 to 30 days past due, 31 to 60 days past due, 61 to 90 days past due, and over 90 days past due. The percentage uncollectible numbers are also given to you here. It is important to notice that the older a receivable gets, the higher the probability that it won't be collected gets. This drives the percentage uncollectible fairly high. In our example, if a receivable is more than 90 days old, the company expects 25% of them to go bad or not be collected. We're going to take these historical percentages and apply them to the data. Let me give you a little background first on why. GAAP requires us to state accounts receivable at their net realizable value, which means the amount that can reasonably be expected to be collected. This company has $30,200 of uncollected receivables. GAAP gives us the option of using several methods to estimate this amount. One of these methods is called the allowance method. Under this method, the accountant takes a look at all the receivables. All of them, not just some of them, but all of them. In this case, each receivable has been aged. We will apply the percentages given to come up with an amount that should be reserved for expected uncollectability. The use of this method was covered in an appendix in your Accounting 100 classes, and it's also covered in Accounting 101 courses. You can find handouts on this method on my Cerritos College webpage for Accounting 101, Chapter 7, something to consider if you need a little background information. So before we start in with our actual data, let's take a moment to review the basic steps for creating your aging analysis. First, we're going to review the aging, which shows all the balances of each customer who owes the company money. Again, realize what the word aged means. All of our data is separated into categories depending on how old each receivable is. Then, we're going to take the historic percentage uncollectible numbers and apply them to each category of data. Finally, after we compute how much the allowance should be, we'll compare it to any pre-existing balances in the allowance account to determine the amount of any adjustment. Since this material was in an appendix in Accounting 100, you may not have covered the concept. Because of this, we will do much of this problem together. Again, we're going to apply the percentages to come up with the estimated balance that should be in the allowance account. We'll make sure that we come up with the check figure shown in Requirement 2. So in our problem, the $30,200 in accounts receivable has been aged into these 5 categories. So the first thing we'll do will be to make a cell reference to the data in each category. The not yet due balance is right here in cell C17. So formula 1, we're going to press equals and click on the amount in the not yet due column. For the second formula, we're going to press equals and click on the number in the next age category of 1 to 30 days past due. And we'll continue doing this until we've captured all the data. 61 to 90 days past due has 3,400 in it. And the oldest category comes from cell G17. Our last formula in that column will be to sum up the numbers. Make certain that that balances with this number. Okay, to refresh your memory there, I was going to draw a little line, but I'll pass on that. So again, especially when you get to the what if data, check and make sure that this total matches this total. The next step is we're going to apply these historical percentages to each aging category. So my first formula in that column will be to take the amount in column D23 and multiply it by the amount in column E23. Okay, and again, continue writing the formulas in. Some of you that are a little bit more advanced might consider copying that formula down if you know how relative cell addressing works. But for the rest of us that are beginners, we'll go ahead and type each formula in. And when we're done, as always, we will compare it to the check figure given in your text. So as soon as I add these up, I will compare it to the check figure, and I do balance. This tells me that my allowance account should be in the amount of $1,460. I'm creating a T account to help you do requirement 3. So requirement 3 in your book says, in the space provided below, record the journal entry for the provision for uncollectible accounts under each of the following independent assumptions. That means that one set of circumstances has nothing to do with the next. So in requirement A, it says that our allowance has an existing balance of $500. What we just determined is based on our analysis, we know that the allowance should be $1,460. Again, that number's coming from the data that we just computed. So let me put this in a red color so you can see it. The question asks us what adjustment is necessary to bring the balance from the current balance of $500 to what the balance should be of $1,460. If you do the math, you'll see that the adjusting journal entry should be for the difference of $960, the difference between the two. So you will do the adjusting journal entry. Again, requirement 3A says record the journal entry. We just figured out that the amount of the adjusting journal entry should be for $960. The author asks you to do the journal entry. So we will debit an expense account called uncollectible accounts expense for $960. and we'll credit the allowance for uncollectible or doubtful accounts for the same amount. For $960. That's requirement A. One of the goals was your ability to interpret the data. So 3B goes on to say, instead of the allowance having a credit balance of $500, it now has a debit balance of $250. Okay, that may happen in the case where the write-offs exceed the amount of the allowance. So our data still says we need to have a balance of $1460. Again, let me make the number red so you can see it. So in this case, the adjustment amount will be derived by footing the T account. And the only thing that will make that T account work is if the amount of the adjustment is the sum of those two items. In this example, the adjustment will be for $1,710. So again, you will do the adjusting journal entry just like we did in requirement A. In requirement 3C, they're going to throw the aging analysis out the window, and this time they're going to have you create the adjustment amount as if we were using the percentage of sales method, which is another method allowable under GAAP. So when you get to requirement 3C, we'll throw the $1460 number out the window because the percentage of sales requires that you just take 1 year of sales, in this case 70,000, and multiply it by the percentage that the company deems will go bad, which is 2%. When you do that, you'll get an answer of $1,400, and once again, the author will ask you to do the journal entry. So in this case, the same debit and credit accounts will be used, but it will be for the $1,400. We spent a lot of time doing most of the work together because some of your instructors may not have covered this in your Accounting 100 class. So go ahead and finish the problem. You will perform a similar analysis for the what-if data, answer questions about a chart, and then do the 2 ticklers at the end. When you create your chart, again, some helpful hints. Make sure you have a 3-part title: who, what, when. Make your chart the best it can be. Consider using data labels so that the user doesn't have to guess at the dollar amounts. And once again, if you still aren't comfortable preparing charts, go back and review Lesson 5 on charts from the QuickBook, as these will be covered on every test remaining. If you run into problems, email me with your questions, attend a lab, come into my office hours, or come into my traditional class, or set up an appointment. Also, don't forget, you can post questions to your classmates on the discussion board, or you can use the chat room to chat in real time with your classmates. If you have a specific question for me, please email me your questions. I look forward to reading your updates by Sunday night. Have a good week.